I'm John Morrison. I'm the CEO of the Institute for Human Rights in Business. And we are very happy to have partnered with the London School of Economics to produce the report, which is part of the discussion today. We started our work on just transition now over 3 years ago. And of course, the question of finance and where the 5 trillion or however much we'll need for transitions per year by 2030 onwards, where that money comes from, is a key part of the discussion. So too is the fact that this finance has to be just, whether it be public, private, or blended finance. And so in a way, the very simple question for us behind this report is which forms of finance are most conducive to just outcomes? Do we know which already are and which could be moving forward? Now, this is not an idle question. I'm in Riyadh in South Africa this week for the Future Minerals Forum. And today, over 60 ministers from around the world, different countries, mining ministers, again and again talking about the need for transition finance, but finance that is both fair and equitable, particularly for Global South governments. Finance that is transformative, that doesn't repeat extractive patterns, that allows Global South countries and governments to climb the ladder of the value chain, to have greater equity in downstream as well as upstream. So it comes up again and again and again. And so I'm very pleased that we're having the discussion today. So with no further ado, I want to hand to my friend and colleague, Professor Nick Robbins, the head of the Just Transition Finance Lab at the London School of Economics, to get us underway, to do the introductions and to moderate today's event. Thank you very much.
John, thanks so much, and really good to have that signal that just transition is really central to all sectors, and the minerals and mining sector being one of those. And we need to think about new business and financial models. So, as John said, my name is Nick Robbins. I'm the founder and executive director of the Just Transition Finance Lab at the London School of Economics. It's a real delight to welcome you again to this session on what next for financing just transitions. We have a great program for you today. We'll kick off with a presentation of the report on the spectrum of just transition finance from Hayley St. Dennis, head of just transitions at IHRB. And then we'll have a panel section. I'll get to that in a while. But at the lab, what we're really looking to do is to be able to show that just transitions are both possible and investable. And we recognize, I think, along with the IHRB, that this needs to have a transformation of the financial system, not least with regard to the nature of finance for the Global South. One of our goals is to identify how financial institutions can deliver climate progress and social justice simultaneously for workers, communities, and citizens. And so it's great to team up with the IHRB and cast the net, and to gather emerging examples of public finance, private finance, and blended finance. And I think, as we'll see, we've identified a small but growing array. This session is really built about what next, looking ahead to the year. And we know that 2025 is going to be increasingly harsh at the intersection of climate change and human rights, with increasing harm to humans, to people and the environment, as well as backtracking from climate commitments by leading governments, as well as corporations and financial institutions. So the inability to agree a just transition program at last week's COP is maybe one of the signals of how the sort of tough agenda we're going to face going ahead. But also, we do still see real leadership and real progress, and the commitment from Brazil's President Lula to make COP30 the Just Transition COP is a sign this agenda is very much alive. So hopefully this report will provide you lots of inspiration about how different forms of finance can support the just transition. So after Hayley has presented, we'll move into the panel discussion, and great to have 3 real leaders in this and pioneers in this area. Kate Hughes, Principal Climate Change Specialist at the Asian Development Bank, and the ADB is one of the MDBs that's really being exploring how best to mobilize its assets and relationships on behalf of its public sector and private sector clients. So welcome, Kate. Then we'll have Luz Martinez, who's head of sustainability at ILX. which is an emerging markets fund manager focused on sustainable development and climate finance. And in many ways, I think perhaps Just Transition is that bridge between climate and other elements of Just Transition. And then Joanna Pedro, Head of Social at the UN Environment Programme's Finance Initiative, which has really been setting out how banks and insurance firms can support just transitions to a net zero and climate resilient future. We'll have a panel discussion looking at the report, looking at what's next, and then we'll open up to you, opportunities to have a dialogue with you. Please put your questions in the Q&A. We'll be looking at that and asking questions, and then hopefully that will really tease out some of the major issues that we need to face in the year ahead. So with that, Hayley, over to you, and let's get into the report.
Thanks so much, Nick, and welcome everyone. I think Nick and John both have given a really good overview of why finance is so central to making just transitions a reality around the world. So I really just wanted to spend a couple of minutes providing a really brief overview of this new report from IHRB and the Just Transitions Finance Lab. It's really a white paper, as we're calling it, and a call to action as much as anything for all actors across the financial system to get creative and to go much farther. So as Nick and John both said, we've profiled 30 different mechanisms across 3 broad financial categories, really to illustrate the various roles and types of financial actors and instruments that could be playing, and in so doing, hopefully exemplify the potential for much greater transformational ambition. So I think I want to state very clearly, this is really a mere snapshot of the spectrum today. So in terms of scope, the examples in the report focus almost exclusively on instruments designed to support net zero and decarbonization. So just resilience, for example, a very important and growing agenda, is not covered in the report, nor is the role of impact investing or philanthropic investments. And all of these areas merit greater focus and attention looking ahead. And I'll caveat that the mechanisms that you can see here in red are certainly not exhaustive either. And there are likely to be many other financial instruments which could be tailored to support the just transition. Quite a few of these examples could be categorized under multiple forms. We've just done it in sort of one pillar for sake of simplicity in reading. And it's worth acknowledging that certain mechanisms or instruments might be better suited to certain types of transition or certain types of actors. Many might even generally be categorized as forms of blended finance between public, private, and philanthropic. And certainly all of these work under the assumption that the private sector and private finance will really need to become the primary source for financing transitions if we are to find the trillions of dollars urgently needed. So based on what we mapped and learned, I guess we categorize really the kind of just transition state of play across these 3 broad categories as follows. Public finance, such as finance ministries, public banks, central banks, really need to set the tone. Even though public finance holds a smaller share of global financial assets, it really needs to be the driver of systemic change through policy and capital provision, including and especially concessional capital and guarantees. And so we are seeing some leading multinational and national development banks really moving in this direction. But we need to see these efforts expanded and accelerated to really get at that transformational element we're looking for. And so we try to cite some different examples, for example, from India, where the benefit sharing scheme with coal communities is channeling 60% of funds to high priority areas for skills development, or the growing sustainability linked government bonds kind of movement, with an example from the government of Chile demonstrating the significant potential we think that the SLBs offer to advancing just transitions. On the private side, commercial banks, institutional investors, insurance firms, and various capital market intermediaries hold the majority of capital, right? We'll say that again and again for what's needed to really bridge that financial gap. And so we need to start seeing transitions really embedded in everything from, corporate purpose and governance and fiduciary duties through to product design and the way stakeholders are engaged. And that needs to include a prioritization of human rights and labor rights standards in their climate finance plans, and ensuring that really access to sustainable finance is improved for clients in the real economy to achieve their climate goals. And so we cite examples starting with really the basics of client screening, where FIs can actually assess client alignment before lending or investing, even going as far as setting up dedicated just transitions portfolios. There's a lot of potential, for example, in going even further with sustainable lending criteria to actually kind of assess plans' alignment with just transition principles in order to qualify for more attractive rates. So that's just a flavor on the private side. And lastly, really on the blended side, we're seeing, as a key strategy being deployed with public and private financial institutions really combining capital to achieve specific social and environmental goals. And, historically, that's really been used to correct market failures, right? Perceived risk mitigation and create investable opportunities, especially in emerging and developing economies. And so this is where I think we saw the most explicit kind of declared examples of just transitions alignment, really kind of deploying public finance to pay for the public goods involved in just transitions. So we have examples of, for example, government guarantees coming in to drive greater private sector investment, right? That traditionally being seen as higher risk, the just piece for private actors. You have MDBs like the ADB cited in the report, really at the forefront of what it means to advance early retirement of coal assets while promoting just transitions. So that's just a brief flavor, and we really conclude with a set of recommendations and conclusions that are in support of this ambition of a much more dynamic global financial system that serves the just transitions imperative. And we offer a range of recommendations for governments and public financial institutions, but also private FIs and businesses to really advance at speed in order to scale these dynamic approaches. Because I think we'd conclude from this exercise that, the just transitions finance ecosystem is still relatively small, and mainstream has to be the ultimate aim. So I'll leave it there, Nick. I'm really looking forward to an excellent discussion amongst some practitioners really at the forefront of innovating what these kinds of mechanisms and approaches can achieve. Thanks so much.
Thanks so much, Hayley, and thanks for setting that up and also just giving a real flavour of what's happening, the dynamism. I think it's really nice, sort of public finance setting the tone, private finance sort of bridging the gap, and then the real focus on blended. Really good background to our panel discussion. So we'll now go to Kate and Luz and Joanna. If you could take down your slides, Hayley.
Sorry, Nick, just working on that.
That's right. And then put on your screens, Kate, Luz, and Joanna. There we go. We can work out PowerPoint. We can finance just transitions. There we go. Fantastic. So really just wanted to get your feedback in terms on the report, just to kick off, because we've had that brief introduction from Hayley, and just to get a sense of your sort of takeaways from the Spectrum report in terms of where we are, and include the examples. So maybe, Kate, if I could kick off with you. The ADB is sort of cited in a number of different places. And where do you see the sort of the state of practice and the practicalities of mobilising finance from your position as a MTP? So, Kate, please, to you.
Sure. Thanks very much, Nick, and thanks, Hayley, for the overview. So I guess first off, congratulations on the report. So it was really good to have it out at the end of last year. I think one of the really great things about the report is how practical it is, right? It just lays out the instruments there with, showing, I think the key thing it shows is that we don't need everything to be new for just transition, right? Most of these instruments exist. There's already solid examples cited in the report. We just need to get on with it, right? And unfortunately, I don't think the discussion at Baku indicates actually how advanced some of these things on financing just transition are. I think one of the interesting perspectives, often the just transition conversation gets very caught up together with the issue of justice, which I understand. But when you look specifically at the financing and you look at some of those instruments in the report, I think one of the interesting things to recognise is that it's okay to still generate profit and support a just transition, because there are instruments in there for the private sector. And secondly, it looks at, if you look at some of those instruments and some of the issues around blended finance, one of the conversations we have a lot as MDBs is this issue of debt versus grants. It also shows you that some of the debt instruments are also highly necessary for just transition as well. And so that full spectrum, I think, of financial instruments that are needed to work together. Maybe the second point, and really where MDBs can come in, is that critical importance of that strong policy environment, right? And there's those examples in the report of the fiscal measures, the tax subsidies, all of those things, and how important they are to really get the system moving. And so I think that role that multilateral development banks need to keep playing in terms of supporting governments on policy making, and also on creating those policy environments. And maybe the last one on blended finance, because that's a particular topic that always gets associated with the MDBs. Often when the discussion on blended finance, people then go to a single deal, right? And they start to look at the actors within that deal on blended finance. But you also really, for just transition, need to look at a systems level, right? That we're talking really about kind of deep structural systemic change. And so if you look across those 30 instruments in the report, you can see that you actually need them all operating in parallel. And I think for that to happen, you need a lot of support for programmatic planning, good upstream diagnostic work, and then programmatic planning so that you get the sequencing and the mix of all of those instruments working together. So yeah, maybe I'll stop there. Thanks.
Okay, super, really good. And I think as we were developing the report, we wanted to sort of move, in a sense, from this idea of a sort of linear spectrum to that more systematic approach. So thanks for picking it up, and like the idea that we don't need to sort of reinvent the wheel. And so you mentioned that it's okay to make profit, and Luz, you're from a private sector asset manager, and your aim is to, I suppose, generate returns for pension funds and so on. What did you take away from the report, and what were the sort of things that, and also I think you mentioned in one of the transactions the sustainability-linked loan that Hayley highlighted in Chile. So good to get your feedback.
Thanks, Nick, and thanks for the report. Indeed, it was good to see, as said before by Kate, very practical, hands-on examples, also to have the public understanding best the concept, as oftentimes we see the concept is not ill-defined, but needs to make some steps to be fully embraced as one category and one concept by the general public, but also by financial market participants. Before I go into the details of the report, let me start by taking a step back and really reflecting and recognizing that transition finance, beyond the social dimension of the concept, has been growing immensely in the last year. In 2024, we've seen big momentum of the concept of transition finance, an insisting category. If we look at the ESMA, so the European Supervisory Market Authority report of the second quarter of 2024, they recognized that they had nearly twice the amount of investments as a pure play green strategies. That is, of course, also seconded, and we see it visibly, that policymakers, EU platform, start recognizing the concept as well. So in the recent report launched in December by the EU platform, they proposed 3 new categories. So if you look at the Sustainable Finance Disclosure Regulation, where typically you see Article 6, 8, 9 categories, those being misused as labels by the market currently. Now the EU platform and the ESAs are proposing to replace this with real categories, including transition as a separate one. So sustainable will be one category, transition finance, second one, and a broader ESG concept will be the third category they would propose. So definitely it's a recognition that there is also a mindset shift from reducing finance emissions to really starting to financing reduced emissions. And that's, of course, recognized as well by the IHRB in a recent report launched by year end. If we want to see real world decarbonization, we need to start supporting companies in adopting new technologies, in really understanding how to decarbonize and how to drop those emissions, more than just selling down positions that would be high emitting or ditching that from their portfolios, which we've seen in the past has happened. I think if we go into the details of the social elements and the fair justice elements of the concept, I see also efforts by different industry bodies to define the concept. The Impact Investing Institute in the UK has also published, I think back in COP28, a fund manager guidance on what the concept means. We are part of the working group at the Institutional Investor Group of Climate Change. I know, Nick, you work with Sophie, which is probably in the audience, Valentina Ramirez, as well, in trying to further refine the concept. But of course, having the set of practical examples in the report is key to do that. So let me go into the details of ENGIE. I think it's good to provide some clarity on what can be done from an investor perspective and how to, of course, integrate into the due diligence, but also in the laying down of the investment strategy, the concept of just transition and the social elements of the concept. Basically, back in 2023, ILX, together with IFC, supported this green and sustainability linked loan to a utility company in Chile. This was part of a broader plan by the government of Chile to fully phase out coal by 2040. To do that, basically, they drew up a participatory process, including unions, including academia, including NGOs, in roundtable discussions, really having those roundtable discussions engaging public sector and private sector actors. So the generation companies, the leading generation companies in Chile, were looking at defining the concepts very neatly. And ENGIE, which is a utility company I'm referring to, already back in 2018, had a very clear just transition program with 3 key elements. Of course, the environmental element, the local development element as well, how local communities are being affected by the phase out of coal, but also employment and training. I think really looking at the relocation of workers that are affected by the phase out or the decommissioning and the closure of the plants is key in the process. If we look at the specifics of the decommissioning of the coal plants of this utility company, they basically were relocating to either combined cycle projects or other newer renewable projects that were close by. IFC as well did amplify some of the grievance mechanisms of the company. And of course, they did put in place a stakeholder engagement plan, which is the ABC. I mean, Kate can second that, of the Asian Development Bank, the IFC, EBRD, all multilateral development banks have always looked at the social and the environmental outcomes together. There's no project that an MDB would originate that would not already consider, even if the climate objectives are the central objectives, how are we securing that standards on labor rights are being that the company has clear commitments on how to further abide and align with the standards. So I think all in all, it's very good to have that report out, very, I think, nurturing the market. Thanks for putting it together.
Super, Luz. Now, I think 2 things I'm sure we'll come to in the discussion is actually the importance of getting recognition and clarity around just transition in financial regulation. So that's very clear, maybe around transition finance, and I'm sure we'll come to that. And then I think you also sort of confirmed the point Kate had highlighted around the need for this sort of systemic approach, that actually there was a governmental policy drive, including the participation, and then there were particular actions in particular sort of coal-fired power stations and renewable plants, which you and others were involved in. So that's great. So thanks so much for those. So Joanna, to you, UNEP FI has really sort of picked up the Just Transition flag, has done some really great work around banks, insurance, and so on. So your reflections on the report and where we stand. Thank you.
Thank you so much, Nick. Thank you also, Haley and John, for the invite. It's great to be here. Hi, everyone. And yes, congratulations as well on the report. It's great to have these reports out there that, as Kate and was already mentioned, also brings out these examples and puts out what is already being done. And also, Kate just mentioned that part, which is things that are already actually being done, but sometimes we don't associate them with just transition. And you do put that relation, also whether the projects are actually being already said that they are contributing to a just transition. But I found it also interesting, this fact that you introduce projects or things, finance instruments that are being used that don't necessarily say, here we are doing this for just transition. But actually, when you look at it and when you go a bit deeper, you do see that indeed they do contribute to just transition, and they are pretty much just transition instruments. So I think that's a very interesting thing. And I think the report also answers to some of the, or gives a part of answers to some of the challenges that you put in the report itself. So we found quite interesting from UNEP FI side, because it relates to what we've been seeing as well, which is this, I think, so you mentioned lack of traction, uncertain over what looks good, and insufficient leadership as reasons of obstacles. And these are 3 out of the 4 that you identified. And these all somehow relate exactly to this not being exactly, not knowing exactly where we are. So this lack of track record of the instruments and lack of understanding what is a just transition. So this is very consistent with what we've been seeing, and also what UNEP FI and UNEP FI members have been requesting to understand what is a just transition, what it looks like, and what it looks like for financial institutions. So we've been also focused, as you know, and we've been working together with you on this as well, on trying to unpack and uncover what are the examples out there, that the ones, as you put in the report, that already say just transition, but also the ones that actually are replying to the just transition issues without necessarily using the flag. And I think other thing we found also interesting in the report is that although you have like the instruments and the type of instruments, but then when you go to the details of it, we really see that they normally come for very specific needs or very specific actors, or so they are not this general, so there's general instruments, but the way they came together normally are quite specific, quite local based, quite going to the needs of the place where we are, of the stakeholders that are being affected. And that also speaks to this need of not only looking at the final instrument, but this process that until we arrive to the instrument. So the need of having stakeholder engagement, the need of knowing where we are, what are the dynamics of the place where we are, of the sectors we are working with, of the people that are being affected, and particularly those that are more vulnerable. So I think that's also an interesting part of how then the instruments are defined and described in the report. And again, going to what I said first on the fact that they go to this description, it also helps us looking under, so not only for the final instrument, but what was behind it. And that also, I think it's very good for, so I really recommend other financial institutions that might be listening into the here to go through the examples, because they can actually speak, when reading the examples, it can actually speak to some issues that they've been finding in their work or some. So I think it's not only the final instrument, but really this description and what was behind it is quite relevant and important. So I'll leave it at that for now.
No, thanks so much, John. And I think that really is looking at the motivations and the context is really, really important. So that's really good. So we've gone into the report, and hope all of you online will take a look at the report and see how the examples and the analysis relates to your circumstances. But I want to now turn to essentially where we ended up at the end of last year, and sort of where we think we are, sort of as we sort of kick off, because COP29, I think, disappointed many. We did in the end get this last minute 11th hour agreement on the new collective quantified goal, a sort of commitment to scale up total finance, particularly for developing countries, to 1.3 trillion a year, and then a sort of quite broad pledge for developed countries to sort of take the lead to mobilize 300 billion, essentially the extension or the upgrade of the 100 billion in climate finance. And I think that left a lot of people sort of feeling quite disappointed. We didn't get a just transition work program agreed in the UNFCCC. But again, around there was actually lots of examples of individual institutions making progress. So I think it'd be really good to get a sort of state of where we're at, maybe where the sort of the points of light and hope are, and so where some of the sort of big bottlenecks. So, Kate, if I could start with you again, sort of where you were at, and ADB is very present, and MDBs are very active at COP. Where do you think we landed after this very fractious climate summit?
Yeah, thanks. I don't think I've still decided. I'm not really sure. I think I feel the same at the end of every COP, that you feel elated in some way and bitterly disappointed in another way. And it always takes me a long time to digest where I end up. I think, obviously it was a climate finance COP. And so there was a heavy focus on trying to push for a number. That's positive in a way, because it was trying to hold parties accountable to come up with something, right? And put numbers down on the talking. I do think it did put that focus onto what that number is going to be, and some of the depth around some of the progress that's being made on how we actually get there, and that got a bit lost in this COP. In terms of the just transition, I really still think we have a long way to go in terms of how it's framed within those discussions. It's still coming out very much as a kind of process part of climate finance. And I really think the conversation, those of us that are in this area and passionate about this area, really need to push to flip this conversation that actually just transition will unlock more climate finance. It's not a kind of process of how we do it. That if we do this part right, then spending more climate or generating more climate finance will happen. And I think that's lost. I think the other difficult thing when you're at that level in the kind of COP is that countries have very different views on just transition in terms of I said it before, but the justice pathway, and that makes it difficult to get a kind of unified view on what a just transition pathway at a global level looks like. Some countries still very much view it on that kind of domestic view in terms of it's the way we do the transition well that we are going to do to net zero. Others very much see it about the broader issue of the entire global climate issue and how we correct and how we ensure justice in that process. And so I don't see those two being reconciled. So I think on a positive way, I think we have to keep moving forward with both, right? That we still need that dialogue, we still need that international negotiation, but we have to just push forward on, as I was saying, like in this report, the kind of practical financing and how we do it. I think maybe last point, still missing from the dialogue is that there's still within the climate space, when just transition is discussed, is still very much an assumption that it's a subset of climate finance, right? And that the discussion is still on the volume of climate finance and how that will work for just transition. But there is so many different types of finance that need to work for just transition, even if the quantum of climate finance is viewed as not fast enough or not sufficient. We need to look at what other finance we can mobilize. And, you know, if you look at things like economic diversification, supporting economic development of countries, there's other pools of capital, there's other actors working on those types of finance that can be kind of motivated and used to generate while we still have that discussion on climate finance. Yeah, so maybe I'll leave it there.
Very interesting. So you heard it here first, Kate saying that just transition finance incentives is bigger than climate finance. I think that's what I'm reading, maybe taking the words out of your mouth, but really interesting. And I think that's that sort of tension, hopefully sometimes creative tension between the sort of necessarily political dimension of just transition and the sort of the application, the implementation point. I think John Morrison did a really good post on that after the high-level ministerial, really drawing out those dimensions. So thanks for that. Luz, I'm going to go to you. I know that ILX was represented, but also many investors were there. Any sort of takeaways from COP29 before we move ahead?
Yeah, thanks, Nick. I mean, picking up on a concept that Kate was mentioning before, I think definitely we should be cautious of not having the concept be adopted as an excuse for inaction, or also not as the signaling that it would just make the transition slower and it will slow the pace of the transition. I think we need to make that very clear to everyone in the market, because of course we see that is often used by different industries which are high emitting as basically an excuse for inaction. That's a relevant point. And I mean, some would be comparing the coal phase out process of Germany versus the UK back in the days, and whether would the UK have been faster because of unions being less equipped or less strong vis-a-vis Germany. So I think those thoughts and those ideas or those conversations that you could hear even in webinars is really important to then point out, well, that's not what the concept means. That's not what how the market should be adopting it. That being said, in terms of the COP29, of course, I mean, I'm sure everyone here in this call is familiar with the high-level expert group report published by Nicholas Stern even before COP28, where the figure of 2.4 trillion USDs that need to be mobilized on an annual basis came up clearly. That's for emerging markets and developing economies, excluding China. And I think although there's a growing recognition that there's no possible global transition without emerging markets, we are, of course, on a daily basis speaking to institutional investors, as they are our cornerstone and cornerstone investor in the vehicles that we manage. And we still see that there's a lack of understanding of the emerging market risk, that the appetite to take on more EM risk is still not where we, as practitioners in this market, think that should be. I think reports that have been launched even before COP30, so in the annual meetings of the World Bank Group in October, such as the GEMS report, the Global Emerging Market Report, which is basically a consortium of more than 20 MDBs putting data into a database that really illustrates a historical experience that they have, both in depth and equity, and they populate it with risk and recovery data. I think it's only really looking and giving confidence to investors on what are the main risk return parameters of the asset class that we will be able to grow just transition in emerging markets, but we will be able to grow the asset class of development finance as a mainstream asset class. I mean, Kate, I'm sure you recognize what I'm saying, but the MDBs have been a huge portion of that NCQG. So you mentioned, Nick, that 300 billion USDs was a final price tag of the NCQG. And also, I think 2 days before that was decided, the MDBs had this common disclosure stating that without even steering too much, they would be able to allocate 120 billion USDs, because of course that's what comes up very clearly in their annual joint climate reports. An addition 65 billion can be even mobilized from private sector actors such as ILX or other institutional investors or commercial banks. I think that being said, what I want to highlight is the relevance of really having development finance institutions, multilateral development banks being at the forefront of this discussion, but also being able to provide confidence to investors in trying to close that gap between perceived risk and real risk in emerging markets, in private debt in particular. I think, again, as I said before, it's the ABC of how an MDB would operate, always looking at the social dimensions, always ensuring that labor standards are complied with, and of course, basically following ILO standards and core conventions. Yeah, so that's my final message. Thank you, Nick.
Liz, that's really good. And you've answered one of the questions which are piling up in the Q&A. Thanks, everyone, for putting in your questions. And one of the questions was, sort of, is there the risk that just transition is being used to slow down the transition? So I think you sort of touched on that. We may want to come back on that. So please, thanks to those of you putting questions already. We'll try and take as many of those as possible. And we'll move on that after we just finish the next round of discussion. So Joanna, UNEP, obviously core to the sort of whole sort of climate arena. What did you take out of COP29, and particularly vis-a-vis just transition and finance?
Thanks, Nick. I will also maybe start with a question on Luz, because on just a point on the just transition versus climate action, or not versus. So because I do think it's a very relevant one, and indeed, I mean, we do believe that just transition is an enabler of climate action, not the way around, the other way around, and it should be seen as such. And if we think long term, and if we think on all the things that need to be done in terms of climate action, we need people to be along in the journey. We cannot do that against people. So we need to include people in the discussions. We need to make that everyone understands what is needed, and is a collective effort that needs to be done in order to change. So we cannot just go in one, try to go without people. People will be on the streets complaining against the decisions that are being taken if they're not part of the discussion from the start. So I think just transition is an enabler. It needs to be part of the climate action as we see it. So I think that's a very relevant point Luz and Kate had mentioned. So, and apparently if there's a question about it, I think it's a very relevant point. And I think it's often used more, I think, as an excuse for non-action than really a belief that it will slow the economy, the climate action and the finance needed for that. On the COP, I think, I mean, when thinking about just transition and thinking of these different levels of international, national and local needs of decision in terms of just transition, it's clearly that this international level is quite challenging, and in the COP that comes forward. But at the same time, I think it's also relevant, and I'm trying to have on purpose here a positive view, but on looking at more examples from companies and from governments that were on the ground and actually bring from the local and national level good examples. So trying to understanding that getting to agreements that are done at an international level come with challenges, but I think the fact that we are ongoing and the changes and how much we've been changing along the years, the fact that just transition has been recognized, the fact that there is a working group on just transition. And I think, Nick, as you mentioned, that it was postponed, the details, but the fact that we are still discussing on it, and I have a lot of hope, and I think that will come after but for the next COP on being a just transition COP, on just transition being in the heart of the COP. We saw also from our side at UNEP-FI, there was the launch of the inaugural report of the Forum for Insurance Transition to Net Zero, and on closing the gap. Almost half of that report is on just transition. So I think, again, it doesn't say in any way that it's a transition report. It's not a just transition report, but a big part of it, it's inevitable on the part of just as well. And I think this bringing in the just transition in the normal elements of climate, and as we start seeing in some of the NDCs, as we see in these reports, I think that's one of the positives that I also take, that it starts to become more natural. It's still not systemic. It's still not happening all around, but it's becoming more natural to have just transition embedded in climate instruments and in climate reports. So I think that's a very relevant point, that we see a trend and a bit of a change. So yeah, I'll leave it here. I think I want to get in this positive way.
That's great, and thanks everyone for responding to my request for more questions. We now have lots of questions and really good ones actually, and really good. We'll just touch on those. But before we go to the questions, and maybe John, if you want to come back in as well, I just wanted to really look ahead. So we've looked at what we try to do to put together a report, the examples, the types of mechanisms. We've gone through where we stand at the end of last year, and now we're looking ahead, sort of really, I think, being really practical about how we advance the agenda around financing just transition as an enabling force. I think, Joanna, you were saying as a way of enabling further other capital. So Kate, what is on your sort of to-do list for the 2025, and what do you need to do sort of individually? What you're focusing on, and maybe where we need to think through as a system? So what's on your to-do list, Kate?
Sure. Okay. Well, the list is already quite long, but let's focus on three things. So I think firstly, I'm sure most of you are aware the kind of role of MDBs has been under a huge amount of spotlight over the last 2 years, right? The Bridgetown Agenda, the issue of MDB reform, the issue of how MDBs operate, and as Luz pointed out, how we, the resources that we have and how we deploy them well. So for me, I think how MDBs ensure just transition is core, is really a really critical item on the to-do list to really push through and elevate even more this year. So we have the joint MDB Just Transition Working Group that I have chaired for the last 3 years. I'm now passing that on. And within ADB, we're developing an operational framework for just transition for the ADB. So how do we actually operationalize that in our bank? So that's number one. I think the second one is around these policy environments. So you cited in the report the example of the Philippines policy-based loan. And we're really starting to see the results of that. So just very quickly, policy-based loans is where we give general budget support, and in exchange, certain policy measures are implemented. So within that report, it was a climate change, in that loan, it's a climate change policy-based loan, and there is a specific action in there on just transition. And that's really galvanized the Philippine government. And we are now developing a national just transition framework with them that they want to launch in Belém at the end of the year. And we started that with a huge multi-stakeholder workshop attended by about 200 people in the Philippines, across unions, CSOs, NGOs, and that's how they started. So really those policy processes that support a just transition and how we can do more. And then the third one is that I still think we need examples of very specific just transition finance to really continue to kind of highlight how critical it is and how we can do it. So at IHRB, we are developing a just transition finance facility. We've finished the draft scoping study and we're aiming actually to launch that by the end of this year. So it's going to be a busy year trying to get that off the ground. Yeah, thanks.
Fantastic. A great to-do list, and good luck. So, Luz, from your perspective, I mean, where do you see the sort of priorities? Maybe some of the sort of, I mean, a lot of the questions actually are talking about barriers, but are there particular things that we need to overcome, particular opportunities we need to seize in the year ahead on just transition?
Thank you. I mean, I think there are some challenges that we will face and we will see coming at COP30. Of course, we need to recognize that COP30 would operate against a backdrop of Trump taking office and scaling back possibly some of the US commitments, of course, all to be seen, but that's scenario that could play out. We see already some of the climate action and commitments of American financial firms dropping from the different net zero alliances. We see EU policymakers somehow rolling back on some of the major regulations. We see now the omnibus law project in the EU, which would bring together the EU taxonomy, the CSRD, which is the corporate corporate sustainability regulation, and the CSDDD, which is a supply chain sustainability regulation. I think we need to be aware of this, and we need to be really determined in our conviction to further advance in the definitions of just transition, but in climate action, generally speaking. I've been reading myself lately, I don't know if you're familiar with Climate Justice by Mary Robinson, probably some of you have read it already. It's a great set of examples, but it's funny to see how history repeats itself, because of course, when she was in Morocco at the COP just 1 year after the signing of the Paris Agreement, she was of course grappling with the same issues in the US, of course, and trying to further understand how to bring local indigenous peoples also to give their own examples on how they are experiencing climate change themselves. So if we could manage to do more of that at COP30, that would be an ideal outcome. Not in my own to-do, but an invitation for people in this webinar. In my own to-do, what we have, so it's basically two things. We've recently have MB approval on our internal climate risk guidance to be used when we do screen high emitting, of course, investment opportunities that are presented in our pipeline. Just to clarify a point, we only co-invest together with MDB CFIs, that's the business model of ILX. But we add, of course, layers of scrutiny. And what we've done is we have including also the concept of just transition in that screening and due diligence process. We are taking actually the definitions of the UK Impact Investing Institute and that guidance that they've launched at COP28 and focusing more and starting with those sectors where we see higher risk of retrenchment in the transition to a low carbon economy. So of course, what we would like to further do is try to understand as the concept evolves and as we see it parking, how we can further implement that in the screening of our own projects and of course in the monitoring phase as well. That being said, we also are closely cooperating with the IIGCC, as mentioned before, in the Just Transition Working Group. And I think the starting point is to really try and understand how we define a materiality matrix, what sectors are key in the consideration of the social aspects of the just transition. I'm sure I'm going to give you a call, Kate, to understand how you are operationalizing that at IHRB. But I think this is what we need as investors, as practitioners. We need further frameworks, we need further guidance, be that the taxonomy or not. We need to understand which are the sectors where an enhanced DD on this concept is required and is needed. So those would be the priorities.
Very good. So getting into the operational, I think from both of you, actually, operational frameworks, your risk framework and so on. So Joanna, for you, as you know, provide with your member base across the world in terms of banks and insurers, what's on your to-do list this year? And also particularly not just yourself, but actually what do we need to sort of resolve as a community to make progress?
Resolve is good. So we are trying to looking a bit at also the gap that I mentioned first and that you have in the report on this knowledge gap in terms of what means a just transition, and looking at that. So already in 2023, together with ILO, we have put together a report for banks and insurance on looking at their governance, their processes, products that they can offer, and with recommendations on how to operationalize a just transition. And looking a bit on that, what we wanted now to do is to work with some of our members that are already in the journey of starting to work on just transition, on looking where they can work more, be it in their governance, if that's the stage where they are, be it in the internal process or as in product stakeholder engagement. So working directly with them and trying to pilot some of the recommendations that we had in the report. So during this year, we'll be working with members all over the world that are wanting to actually work internally. So it's not just a guidance, but it's actually working internally on different recommendations on just transition. And then we plan to have a report based on that being sent out by the end of the year, with also this idea of not only that we work with these individual institutions, but that then we can also, that can be used by other institutions as ideas, as things where to start. So that is one of the things we want to work, is like develop more knowledge on what is an investment or what is a project that is just transition, what is a good policy in a bank considering just transition, what do we need to change in terms of the practices that we already have. And they're also not necessarily, as we've mentioned from the first question, not necessarily saying that nothing is being done, but one of the things is also to look what these institutions are already done and what of it is actually on just transition and working from there. Another dimension that we already mentioned, and it's also mentioned in the report, is this local dimension, so the location on where we are working. So one of the things, and we'll start by Latin America, one of the things is that we want to deep dive a bit more on what does it mean to just transition in the different contexts. So we're starting with a Latin America deep dive. Still, Latin America is quite large, but we will work by sectors and by countries, priority sectors and priority countries. And we want in 2025 to work with institutions from Latin America, so with members, both banks and insurance from Latin America, and contextualize the report that we did, which was a global report, contextualize it to Latin America. So this will be done and we'll present it at COP next year. So we also hope, again, that by presenting at COP, we bring also from the private sector things that are already happening, things that can continue happening, and recommendations. So also to, as I was saying, I think one of the important things of the COP, especially when some of the agreements are not as ambitious as we think, is also inspiration from more individual and particular things. So we hope to bring a bit of this inspiration with this report. And then other thing, and connecting right in the beginning, Nick, you did mention that one of the important things of the just transition is this correlation or this intersection between climate and human rights. And of course, we think that this is a very, very relevant point on how do we bring human rights and business and human rights, the UNGPs, on the center also of the just transition. So we are actually at the end of this month launching a toolkit for financial institutions. It's more focused on banks, but it's for all financial institutions, which goes through the different pillars of the UNGP. So policy, human rights due diligence, and then grievance and remediation. And within that, we have indication for financial institutions on what they could be doing, what does the UNGP say to do, but also it directs to everything that already exists out there. So basically it's more like a resource. So it's a web page, and it will direct to everything that exists out there that will help you to do a policy. If you want to do a human rights policy, it will help you to do your human rights due diligence. It will go then also for the different sectors. And we have sectors that are super relevant for the just transition, such as mining, transport sector. So we have specific transport sectors where you can see ways on how to take action, where to go and find examples, where to go and find other institutions that are already doing. So we also think that that will help to bring in this human rights perspective within the work that financial institutions are doing, and therefore having always, whenever they're doing climate action, that this is already part of the normal business. So hopefully at some point, the normal business as usual of banks will be having this human rights approach embedded and integrated in. Yeah. I think those are in the agenda of UNEP 5 for this year, and we hope. I think Nick, you also mentioned just in general. I think one of the things that is very relevant, it's this working together, collaborating, and doing things together. The climate action that we need everyone on board. So I think that's also one of the very important things, is that we are working together in the same direction. So for sure, it's the same way that when we put recommendations, we say it for the financial institutions, but I think it's at all levels. We do need to work together.
Fantastic. So I think in a tough year, working together is a lot. So some lots of practical examples. Now we're going to turn to the next 20 minutes or so to answer some of your questions. I've been looking at them. There are lots of really good questions. And maybe if some of the panelists want to look at questions as well, maybe ones directed to you really answer. But I think one cluster of questions is around sort of the barriers, the questions around barriers around sort of definitions and clarity and regulation, I think. One about risks, huge questions about costs of capital, particularly in developing countries, also how to mobilize local currency. So particularly sort of, it'd be good to get sort of your thoughts as a panel, and maybe John, Haley as well, just sort of particularly sort of the barriers we need to unlock. So maybe start with that. Who wants to go first? Sure.
Yeah, and it also rifts a bit off where we finished, and then this idea of where we go next this year. The Riyadh today and the discussions, mainly African and Asian governments speaking today, and it does sort of stress to me the way that we need to think about things more systemically. Of course, I've written a book about it. That's what I think about. But let's remind ourselves that some of the things that we sort of all focused on 2 or 3 years ago are still true, right? Just transition, whether it be finance or a wider discussion, place-based, time-bound, 4 legs to the chair, due diligence, beneficial outcomes, procedural aspects, but also transformation. And we leave the transformation piece out, as many global North actors tend to do on finance and other issues. We're talking past many of our constituents in the global South. 2 other things. CBAM hasn't been mentioned, right? So the way that CBAM was mentioned a lot today by global South governments. So the way that trade, both for and against climate, right, is going to factor into this, and the justice of CBAM. I've heard some discussions around that at COP as well. We can't ignore that, I would say, and that brings in trade finance and those questions. And then the other 2 COPs, right? So one thing we did see at the back end of last year were the biodiversity and desertification COPs, and the growing sort of beginnings of just transition concepts in both those 2 processes. And if we think about agriculture and food systems as a key element of what the Brazilians will talk about this year, the question I then think of is, clearly this will become a question not just of climate finance, as the point was made. How do we bring this discussion? If we were going to do the report again, Nick, would we be looking at biodiversity and other forms of transition finance that are allied and need to be allied to climate? But they're my thoughts anyway. Thank you.
Fantastic. Okay, so barrier busting. I don't know.
I mean, I see a question by Vivek Anandan that is a bit more general. What is really currently holding transition finance back? I think to that point and to the barriers point, especially, of course, in emerging markets. I mean, if we think about transition finance, we are basically thinking about how to abate sectors. We are thinking about those sectors. If we look at manufacturing activities, that being steel, cement, or other hard-to-abate sectors, where technology is not yet available. If we think about emerging markets, there are scarce examples of electric furnaces that can be used and deployed in steel to actually reduce and decarbonize that sector. I mean, we see a lot of great examples of green steel in the Nordic countries, I think supported by the EU Commission and supported by a lot of grant capital and public finance. We are currently seeing in our own pipeline a few examples of kind of green steel initiatives in emerging markets, but that's very much incipient, of course. Technology is not available, but also let's say the commercial incentives for those companies to really take that step are still missing. So I think what we should be seeing more of at COP30, but in general, is how government can help shape the policy so that they would be deploying carrots and sticks for those corporates to really move and take that first mover advantage in any case to basically advance transition finance. And of course, the shaft elements are something to continue chewing on as a group, what that all means in different sectors.
Okay. Kate, maybe to you, questions around cost of capital and also particularly local currency investing and particularly how MDBs can use more sort of local currency issues, which is obviously going to be core to getting this agenda mainstreamed. I don't know if you want to pick up those points.
Sure. I think maybe on the just transition in that whole question, and it's addressed in the report looking at different instruments, right? And we've mentioned briefly about this systemic view. There's different types of instruments that are suitable for very different parts of this overall problem that we're in, right? And you can't take one approach anywhere. A lot, if you look at the social side of just transition, there's a lot of need for local financing, for grant financing, for highly concessional financing to drive forward social needs, SMEs, women-led businesses, retraining, reskilling, all of those problems or issues. But then on a more macro level, you're also talking about kind of deep economic transformation, right? And that's a very different financing problem that needs very different instruments and approaches to address it. And when you're talking about large infrastructure development, helping governments to plan infrastructure in the right areas to support the transition, and then that's where it's different instruments. That's where debt is different, concessionality is different, and approaches are different. So I think what my comment was, which I saw someone commented on before when I said that, we can't be scared of debt in just transition, is that different parts of the equation need the different parts of financing. And really, if we're going to do it, we have to push that whole systemic transformation. We will never get enough grant financing to push a just transition. In terms of local currency, I mean, all of these issues are part of that big broader MDB reform that I mentioned before as well. Looking at things like debt for climate, looking at how you do debt relief in disasters, how you do more local currency, how MDBs essentially are much more flexible in the way they do it. It really comes down to risk appetite, and there's a lot of pressure on MDBs to do it, but really to point out it's also on our shareholders, right? And a lot of our shareholders are the ones that are there in those negotiations at COP and pushing certain things. They need to also push that through in the types of decisions that they take to the MDBs, because that's one of the places that they deploy a huge amount of their resources through for this issue. So I think I was going to comment on on barriers just quickly. So I think two of the big things on barriers on the upstream, the cross-government collaboration is still really something that needs to be worked on a lot. And you will have seen that quite a lot in the JETPs that have gone through. I talk particularly for Asia because that's where I work. Finance, economics, and environment or climate are there in those discussions, but the social ministries, the education ministries, even the labour ministries, they're not there up front in those discussions as part of the early planning. And so you're never going to support a just transition unless you have those ministries and those stakeholders as core parts of the planning team, not being consulted after. And so I think that's one. And I think the second, Luce mentioned it, is this fear around cost of transition, and that just transition is going to add cost to the overall transition, and that really is a barrier that particularly, we engage a lot with governments on the topic, and it's really the first, I think, comeback that they have. Please don't bring us another topic on top of something that's already so expensive. So how we address that and look at different ways to ensure that the just transition doesn't add to the cost of transition. Thanks.
No, that's really important. I think one of the things probably for all of us is to price the just transition and actually to see how it should be represented. They're not very good estimates about the sort of the overall cost. So I think that's one of the elements, and actually, so it's not seen as a barrier. Joanna, on barriers, you mentioned some of the things in terms of the things you're doing with banks and insurers, but are there other particular things, particularly in light of the questions in terms of financial mechanisms, greenwashing definitions, cost of capital, and other things? And developing countries in particular, I think it's particularly how, I think as John was highlighting, developing countries can define just transitions according to their own needs and circumstances, and not have it imposed upon them.
Yeah, I think, on barriers and incentives, and I think on the report, you show this spectrum of finance, right, where you go from the traditional finance that is only profit looking and all the way to the impact finance, only impact looking. And I think one relevant part is that when we look at this side of the spectrum that is only looking at the cost, exactly on how do we include and how do we have minimum standards coming from governments, coming internationally, but to ensure that even when we are looking at that side of the spectrum, when we are looking at only the financial side, how do we internalize the costs of not acting? So how do we bring both the costs of not acting on climate, but also the cost of inequality? So I think there is work that needs still to be done, and there's a lot of work already around it, but to be done on including that on the actual, what is actual the value that is coming in financially, bringing also these questions on climate and on inequality. I do think that's quite a relevant point, because if we are not all at the same, if we don't have all the same minimum and the same play field, then it's a bit hard to work, because, and again, I'm repeating myself, but we all need to work in climate action, just transition. It cannot be led just to the ones in the spectrum that are closer to the impact. Those are very important, but we will not get there with that alone. So I think that's important to have minimum standards that we look at and to internalize these costs. I got now a bit lost with the rest of the questions. Speaking about this point, I don't remember the rest of the question actually.
Okay, that's fine. We've got about sort of 15 minutes, 15 minutes left. So keep thinking and keep remembering. There's a lot to do to think on your feet. So that's good. One of the questions I think which was really interesting that came in is we've all been talking about the need to make finance and just transition very specific to place and context, and yet we need scale, and we need to make this as replicable as possible, and then we need to make it efficient in terms of cost. Are there ways in which you can see that we can do this, so we can both have sort of common principles which enable scalability, but also that we can make it specific to place? I don't know, Kate, obviously you're dealing in a huge, very diverse region. How are you managing this issue about having sort of common principles, but also being able to tailor to the needs of particular countries, whether that's Philippines or other members in your region?
Sure, maybe I can give an example. So the energy transition mechanism that is mentioned in the report. So this is a financial mechanism ADB is developing with others for financing the early retirement of coal-fired power stations. So my team developed in the just transition aspects of that. And so that is a mechanism that was established specifically with the intention to scale, right? And the intention to go out of the MDBs to the market, to be a market-based mechanism. So it needs to be replicable across transactions in order to achieve that. But in the first few pilot transactions we've done, we've seen how very specific the circumstances are around each particular coal-fired power station, each government, each, you know, all of that context. So how do you kind of balance that? I think you can establish good process, right, that you can replicate. So you learn so much in that first pilot transaction. We learned so much in terms of how to practically implement this process of just transition through that. And I think that learning is then now captured in a process that we use for other transactions. But we need to make sure that the information, the consultation, the stakeholders, and the decision-making that are used in that process are specific to each one, if that makes sense. So we now, you know, we developed a lot of learning in Indonesia for that transaction. We're now looking at it in Kazakhstan. You really couldn't get, there's some similarities on coal, but very different contexts, different stakeholders, different economies, different people. But you can take the process that we learned in Indonesia and apply that in Kazakhstan, but make sure that you are then place specific.
Super. Yeah. Joanna, Lewis, any sort of closing thoughts?
I think.
Go ahead. No, go ahead, Joanna.
No, I think on this example, I think indeed is of course a strike of balance. But what we, I mean, I think there's always general things, and I don't know. We have, for instance, examples of some of our members in different countries working with retrofitting on housing, so making that houses are more prepared and more isolated and more energy efficient. So, and this within what we see is that there are similar solutions being used in different countries, but then within the country, the banks are looking at is there any incentives that the country have and supporting people in arriving to those incentives, and these will be then local specifically. So I think there are a lot of things that will be general, but it's about then going to the details when it comes to where you are and the people that you are looking at and who are your clients. So I think it's not necessarily you need to create each time and go and do a whole baseline. So that's just to say that when we say that is local based, it can mean that in some specific cases, but in general, it doesn't mean that you need to do a whole baseline and spend 2 years discovering what will be your product of just transition. But it just means that you need to look at what are the things that the products that you are already offering even, and just do this part of understanding, does it work? And this is also then good in terms of your own business, because you want, of course, that you already do, and all financial institutions, they do this, right? They do products that will work for their clients. So there is always this analysis that is done. So I think that's a part where it's not necessarily spending all this time looking back, but making sure that the answers do reply to the answers that are locally there and the transition needs. Thank you. I'll pass to Luz while there's still time.
I think a general concept, of course, is let's make sure that the perfect is not the enemy of the good or the good enough. Let's make sure that we can scale up sufficiently to achieve that 2.3 trillion gap that we are facing in emerging markets. We need to scale up. We see, as mentioned before, a lot of pressure of MDB systems to have reform agenda be implemented. We need to go from the individual investments on the case by case to more programmatic approaches. I mean, we see different versions of that, of more programmatic approaches being initiated by MDVs, CFIs, SRT, so synthetic risk transfers being one of those vehicles. But definitely, I think what we need to see is more programmatic approaches, more scaling of these to be able to deliver on the goals we have.
Fantastic. Well, time is a non-renewable resource, so we're coming against time. Just maybe my own reflections on some of the themes that come up. I think, John, very good to highlight the issue of trade, clearly with tariffs now coming onto the agenda more profoundly. Already we have that in the sort of electric vehicle arena, obviously, but the incoming US president is going to be putting more tariffs. And this whole think of the sort of the international trade and investment linkages, the cross-border impacts. That's something that we're the lab been looking at. My colleague Jodian Wong did a piece on interconnected justice at the COP, so that's worth looking at. A couple of questions about sort of where can fund managers and others look for data. A number of sources. The World Benchmarking Alliance does a lot of very good assessments around this, linking climate, human rights, social practice, and the Transition Pathway Initiative at the LSE also looks at assessing corporate practice, banking practice, but also the performance of countries, so sovereigns in terms of the bond issuance, and that came up a lot. So some really interesting sort of resources there. And just to say, I suppose for us looking ahead, I think we're going to be really focused on really showing the practical deliverability of just transition, which I think has been echoed by all our panelists as contained in the report. One of the areas we're focusing on in particular is the bond market and looking at how the bond market can be a vehicle for delivering just transition. So picking up some of the examples there, and also looking at the policy arena again around the sort of new round of NDCs that have got to be delivered. So I'm going to finish there. Hayley has had her screen off for the last 45 minutes or so while we've been talking, and has been pulling together a very elegant summary of all we've been saying. So over to you, Hayley, to close us off and to sort of send us on our way. Thank you.
Goodness, thank you, Nick, for that setup. This has been an incredibly rich discussion, and I think the panel really being very illustrative of the kind of full spectrum from NDBs to private FIs and kind of the intergovernmental leaders guiding practitioners. So I'm not going to attempt to summarize, but some key challenges as well as opportunities really came through for me. I think on the challenge side, you know, first and foremost, I think in terms of the current state of play around just transitions, kind of generally, and just transitions finance more specifically, I think it's fair to say COPs as kind of a global dialogue aren't always fully reflective of that state of play. So yes, the new collective quantified goal is hugely important for accountability, but how we kind of get there got a bit lost in Baku. And likewise, kind of around the current postponement of the Just Transitions work program, in part due to divides between kind of this process focus versus really emphasizing that Just Transitions can actually help unlock more climate finance. So I think reflected that sort of Just Transitions finance is still at the margin and not yet adding up to systemic solutions. And kind of a key constraint really holding finance back is this lack of agreed principles, taxonomies, metrics for Just Transitions. We heard, from various speakers today about a lot of work still being spent on those fundamentals, and that's really pressed against some very hard deadlines for progress to 2030 and 2050, of course. So I think another sort of challenge we heard is how important it is, of course, that the Just Transitions frameworks and instruments really acknowledge the importance of sort of timing and cohesion of activities towards stated goals. And that's typically going to be very localized. And so a substantial amount of work, yes, does need to be carried out in that design phase, really identifying potential impacts, positive and negative, which requires analysis, it requires engagement, all of which really is critical to defining appropriate action in subsequent phases. And maybe the last challenge that really came through so strongly for me is this kind of the spectrum from greenwashing to kind of co-option of the Just Transitions agenda is very real. but so is the genuine fear of the cost of the just piece of transitions. And so there's a bit of an avoidance we're seeing of that. But we can flip that, I think, as everyone here is really kind of champions of just transitions. And that comes in terms of an opportunity around narrative and really landing the message that just transitions finance is actually bigger than climate finance, right? We really need, I think, champions to push this into mainstream understanding that just transitions is an enabler of the transition and really kind of neutralize that co-option risk. And key to that is really proving, I think, urgently the value that getting it right, the value of getting it right is far higher than the costs of getting it wrong. And so COP30 at the end of this year in Brazil will be a really crucial moment as the Just Transitions COP. I would quickly highlight 2 IHRB projects that are trying themselves to contribute to this. One, looking really at the costs of kind of getting it wrong, as I say, in the wind and solar rollout, really demonstrating the value of human rights due diligence being upfront. Another around narratives and a Just Stories project it's referred to, highlighting where we're really beginning to see evidence of the kind of very positive impact of actual Just Transitions projects on the ground. So have a look at both of those. We'll pop links to them in the chat. I think in terms of 2 other kind of key opportunities I heard, one again and again was around the sort of critical importance of a strong policy environment really undergirding everything. And that's back to that point in our Spectrum report that public finance really has to set the tone with kind of fiscal measures to move the system. So if we can get that right and really gather momentum, that is an enormous opportunity. And we heard from Kate about the opportunity of the MDB reform agenda, and more broadly, I think connecting decarbonization more closely with adaptation, with resilience, and really that full kind of planetary picture. I think final opportunity is maybe kind of a basic one, but one that I think we all need to take away again and again. You know, just transitions finance and even climate finance, you know, it's not a homogenous lump sum, and there really is a full spectrum of actors and instruments that need to be deployed and work together. And that really ties to a great message I heard at the start, which is that, you know, we don't need everything to be brand new and shiny for just transitions to gather pace, right? We don't need to reinvent the wheel. There's so much already at our fingertips. We just need to get on with it. And I'll echo Joanna's great point about the importance of human rights due diligence and sort of the existing international standards via the UN Guiding Principles on Business and Human Rights, which can take you a very far way down the just transitions pathway. One last thing I didn't hear that's certainly coming through very strongly in our work is the critical importance, I think, of confidence building at this stage in the transition. We're still hearing again and again in our engagements how new just transitions is, how no one really knows where to start. There's no good practice out there. But I think we are getting to the tipping point now of really putting this refrain to bed. And there are a lot of examples cited in our report shared by our speakers today that people can really delve into and learn from. And I think really key to that I think the Just Transitions movement needs to emphasize again and again is really connecting the transition in to the transition out. And we heard a little bit about the importance of sequencing, but I think really key is demonstrating the opportunities that come from change to really preempt the fear and concern that can come from closure of old ways of economic and industrial activity. And so really challenge, I think, everyone in terms of what you can do from this webinar tomorrow is really look at how you can build confidence early on through quick wins, you know, early measures, whatever it may be, including how to really design in those green value chains to create opportunity in the transition and after closure, and doing that early on. So I'll leave it there. Thank you everyone so much for your time, to our panelists, Nick for your excellent moderation. Please have a look at the report. Please reach out to us and to our speakers if you're interested in finding out more, have ideas for collaboration, and thank you for yourselves being Just Transitions champions. Take care.
Thanks so much, everyone. Thanks, Kate. Thanks, Luz. Thanks, Joanna. Thanks, John. Thanks, Hayley. Thanks, Deborah. And thanks, Sam, for setting this up. And let's go and do it. Thank you.
Thanks, Nick. Bye for now.